Welcome to today's stock market news update. A CNBC article says stocks ended the day lower on Thursday after giving up early gains, with bank stocks leading the drop because of concerns over bad loans. Regional banks like Zions and Western Alliance dropped, with Zions falling 13% after it took a large charge due to bad loans from a few borrowers. Jed Ellerbrook, a portfolio manager at Argent Capital Management, told CNBC that the market is very nervous about losses tied to credit. He added that the market is not pleased with what the regional banks said, so most small financial companies and banks were down that day. The banking sector has been tense recently after two companies linked to the auto industry went bankrupt, which has sparked worries about loose lending, especially in the private credit market that is hard to see into. JP Morgan CEO Jamie Dimon said on the bank's earnings call earlier this week about the collapse of First Brands and Tricolor Holdings, that when you see one cockroach, there are probably more. This kind of news from the US banking world could affect investor confidence and move markets as people watch for more signs of credit problems. Shifting to news from China, where tech and auto sectors are making headlines. A CNBC article reports that the Chinese tech company Alibaba says its spending on artificial intelligence for its e-commerce business is already paying for itself. Vice President Kai-Fu Zhang told reporters on Thursday that the company is getting back its investment in AI for that part of the business. Alibaba has made a big bet that AI will bring in returns, even though some in the market worry that companies are putting too much money into the technology without much to show yet. Last month, Alibaba said it will boost its spending on AI and cloud setup, after promising in February to spend 380 billion yuan, or $53 billion, over the next 3 years on the tech. Zhang said early tests show steady results from AI, including a 12% rise in returns from ad spending. He said in Mandarin, as translated by CNBC, that it is very rare to see changes in the double digits in those tests. Zhang expects that with AI built in, there will be a very big positive effect on Alibaba's gross merchandise volume during this year's Singles' Day shopping event, which focuses on November 11th. Updates like this from China's tech giants could influence global views on AI investments and how they play out in e-commerce markets. On a related note from China's auto industry, there's news about a major recall. A Reuters article says the Chinese car maker BYD will do its biggest recall so far, pulling back more than 115,000 Tang series and Yuan Pro vehicles made between 2015 and 2022 because of design flaws and safety risks tied to batteries. China's market regulator announced this on Friday. BYD has sent a plan to the State Administration for Market Regulation to recall 44,535 Tang series vehicles built between March 2015 and July 2017, where some parts have design issues that could lead to abnormal functions. This recall in China's electric vehicle space could draw attention to safety standards and affect how investors see the growth of the auto sector there. Still in the realm of US-China relations, but focused on tech tensions. A Reuters article reports that the US company Micron plans to stop sending server chips to data centers in China after its business there did not bounce back from a 2023 government ban on its products in critical Chinese infrastructure. Two people who know about the decision shared this. Micron was the first US chip maker hit by Beijing, in a move viewed as payback for several limits set by Washington to slow down China's progress in the semiconductor field. Decisions like this highlight ongoing trade frictions between the US and China, which could impact supply chains and shake up global tech markets. Finally, moving to international trade developments involving the US, India, and oil. A Reuters article says the United States and India have had useful trade talks, and Indian refiners are already reducing Russian oil imports by 50%, according to a White House official who spoke to Reuters on Thursday. However, sources in India said the reduction is not showing up yet, though it might appear in the import figures for December or January. The sources noted that refiners had already ordered for November loading, which included some shipments arriving in December too. Shifts in oil imports like this, tied to US and India relations, could play a role in global energy prices and market dynamics as trade patterns change. That's all for today's video. Stay tuned for more updates and don't forget to subscribe.